Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, today's date, Wednesday, June 4th, 2014. Markets are trading flat to slightly positive. Right now we have the S&P up just under 3 points, Dow up 8 points, NASDAQ up 16. NASDAQ is leading today after the last couple days lagging. And again, we're seeing some decent moves out of some of the social networking stocks, along with a few others out there as well, which is catapulting this market slightly higher, and especially the NASDAQ slightly higher as well. Now, a couple things to monitor here. Number one, S&P is trading at a new all-time high. This line here represents the prior all-time high right in this range, so we are just above that. I'm curious towards the end of the day to see, do we sell off and come below, or can they keep the market above? If they keep the market above, then it's a slight positive for the market, obviously. It's a new high. It'll coax in new buyers, and you should, again, see the chance, at least, that the market's able to continue to grind up. Now, we had a lot of economic news today. We got out the ADP private sector numbers, which came in a little more poorly than expected, and that's why you saw the gap down. But really, people's eyes and ears are just turning towards the ECB tomorrow, as well as the unemployment report and non-farm payrolls on Friday. That's all people care about, and right now there's a positive vibe out there that it's going to be good news. So again, that's why the markets were able to recover. The other factor is, look at the volume today, guys. Look at the volume on the spiders. It's literally after 3 o'clock right now, so less than an hour till the close, and you have less than 38.5 million shares traded. I think the last lightest day was about 55 million on the S&P this year, or on the SPY. So we're on pace. Get this, guys. We are on pace right now for literally the lightest trading day of the year. That's pretty astounding, because it's not like it's a Monday. It's not like it's a holiday Friday or anything going into a long weekend. I mean, we're smack dab in the middle. We're on a Wednesday right now, and this volume is very detrimental to volatility. So when you have light volume like this, the market's able to continue to float up very, very slowly and just kind of grind higher. And that's what we've seen today for the most part, and it looks like, for the most part, that's what it looks like it wants to continue to do. Now, again, if we get the right set of data points, if the ECB does something unexpected tomorrow, if the jobs numbers on Friday are unexpected, you could see some sort of volatile reaction. But again, it has to be accompanied by volume. If you see a drop or a gap down on the markets and there's no volume behind it, mark my words, they can float it back up very, very easily. So that volume is now becoming more and more important to the downside of the market. It's important to the upside, but lack thereof is important, meaning that if you have no volume, then it's very easy for the market to go up. If you have volume, then it'll go down to the downside. So that's something interesting that I wanted to point out. And again, interestingly enough, in this line I've talked to my members about literally for weeks at this point, but take a look at this trend line right here. All right, see how, and again, it's hard for me to zoom out far enough to show you where this comes from, but look at this pivot top, and then if we zoom back even further, keep an eye on that pivot top. Look, it comes right from here. So if you connect this high to this high, this line, look at this. Keep your eye on it. It comes right through here, and we hit it here. And let me zoom in a little bit so we can see a little bit better. So you hit it here, bounced, you hit it here, bounced, you came down, you closed below it but never confirmed, bounced back up, came down, hit it here, closed below, never confirmed, gap down to it today, and bounced off. So this is your bogey line right now. This is the line that as a trader you have to be paying very close attention to, even as a swing trader, because if this line gets broken below and you confirm below it, especially if you close at the end of the day below it, then that opens up the door for this market to really drop. But as long as it's staying above, they're defending this trend line like it was the king of the castle. Really, they are. Just to look at how many times, I almost can't even count on both hands how many times we've hit it and bounced off of it at this point, leading up here. And every time, notice how, and this is very interesting, notice how when you hit it, you're bouncing up, but the bounce isn't that high, and here you're bouncing up, but that's still not that big of a bounce. Up again, down, up again, and so forth. And here's another bounce, but notice how you're stalling out already. My guess is either today or tomorrow, probably tomorrow, we'll touch it again. Now, whether or not we break it is another story. That's up in the air. But again, just notice how the bounces, this is actually one of the bigger bounces off of this line, and it just seems like it's pulling us back to that line, even though we're not able to break it yet. So these are little things that as a trader you got to really understand and pay attention to, and this way if the markets are going to see some sell-side action, just watch this trend line right here. All right, watch to see if we confirm below it intraday and if we close at the end of the day below it. Okay? So really cool stuff here, guys. I mean, there's actually some pretty cool darn stuff. And just to go over a couple other charts out there, we're seeing the dollar slightly stronger on the day. So the dollar, again, is inching up. If we go to the daily chart, you can see this. The dollar slowly inching into resistance. So again, here's your pivot high here. Look at the 200 right there as well. Look at how the dollar's just slowly been moving up into that range. Now, it's interesting because we're coming into that range. Get this, guys. We're coming into that range literally into the ECB tomorrow, which should, when the ECB decides what they're going to do with interest rates, and they may go negative interest rates, which would be a first and be a pretty amazing thing to see. I don't think it would have a real negative impact on the market, but you never know. But that'll affect the dollar here, right? The currencies trade against each other. So the dollar should get affected, and I'm curious to see if we hit this level and start pulling back or how this reacts as we're coming into this line. So watch that very closely. Gold, let's take a look here. Gold continues to be weak, although it has gone sideways the last few days, but it's starting to make a bearish pattern. My target on the GLD still remains at 118 to 118.50 short term. Silver, Silver's down just slightly. Same thing, bearish pattern starting to form on that chart as well. And again, you'd expect that to be a little bit on the weaker side as well. Okay, oil. Let's take a look at the USO. Then we'll look at some individual stocks briefly. Yeah, that's a pretty interesting chart on oil because it gapped up this morning and then gave it all back. So we had oil inventories today, and if we flip to the intraday 10-minute chart, you can see here's where oil inventories came out. Or here, right here is where oil inventory. Then you got a bearish pattern, and then a big drop right here, just around 11:30 time frame, and then it's kind of trailed off. But that's a nice little sell from the highs. It's not a big down day in oil since it's only down 14 cents on the USO, but it's from this high pivot up here that's a pretty solid sell-off. That's a pretty big sell-off from that high. All right. I also want to take a look at Apple today. Apple is stronger by $9, guys. I gave you a target in the last few videos of where Apple's going. I'll tell you one more time. The level is 653, 653. That's where it's headed. I've been strong on that for a long time now. And again, we are slowly making our way there day after day. And this is one of the reasons why the NASDAQ's outperforming as well. Very strong stock there. Amazon, nice rollover on Amazon. Look at this. There's an intraday Amazon chart. Floated up off a gap down here and right into the 200. And then look at this rollover. We're basically back to the flat line. That's something to pay attention to, although it's not a major leader. You don't look at Amazon as much as you'd look at Apple. How's Baidu doing? Baidu slightly lower too, so there's two pretty big stocks in the NASDAQ that are weaker, but Apple, again, much stronger. And then if you take a look at some of the bigger players, look at Facebook. Facebook's having a great day, up almost 1%, 62 cents. And Twitter's also higher, although off its highs. Twitter's actually making a bearish pattern here, but I don't know if there's enough time for anything to play out towards the end of the day here. One other thing I'd like to point out, guys, and I think I talked about this to you guys yesterday, the IYT. Look at the rollover on the IYT here. Beautiful rollover. Had a big down day and reversal day yesterday, and I hypothesized yesterday that the IYT, which is the transports, were putting in a top. And considering the markets are green today and IYT, which is the transport ETF, is red, it does seem like we're heading in that direction, which to me is kind of a heads-up signal. It definitely, to me, would be a little bit of a heads-up signal and something that I would want to pay attention to because I do think that is, I think it's a pretty pertinent signal. Because remember, the IYT, if you look at the Dow chart and the S&P chart, it's almost mirrored. I mean, the IYT's been the leader. If you zoom out, look at how overbought short-term IYT is. And this is the transport index again. And if this reversal holds true, and considering we're seeing almost confirmation today, this could signal something troublesome on the horizon on the markets of the S&P and the Dow at least. NASDAQ's kind of in its own world. That was the biotech index. If you remember, the biotech index was the signal there. And the biotech index, we saw it rolling over, starting to roll over, and then the NASDAQ rolled over sharply over here, and then it's bounced, and so was the NASDAQ. But the transports should be that signal for the Dow and the S&P. So just something like that to watch. I think it's very important to kind of keep an eye on. All right, guys, I think that's all for now. Come join us at InTheMoneyStocks.com. Profit with the pros. That's all I got to say. Take care. Have a great afternoon, great evening, and come take the 7-day free trial.